Everyone, welcome to Smart Investing. I'm on a little break right now, so I need to catch up on some videos. I thought I'd let you guys see this video that I'm doing. So for this video, it is going to be about the banking services sector. It is 1:21 p.m. in the afternoon, August 28th of 2023. Markets are open. Let me just put my phone on do not disturb real quick. So I have 3 stocks, not 5, because out of the 5 that I'm gonna do, 3 of these are actually active, and then 2 of these are actually not even in the stock market anymore, meaning they're delisted. So these are the 5 stocks that I have. Ticker symbol CIT, BKU, EMCF, BANF, and FITB. We're gonna start with CIT. Let me see something real quick. So this one was actually delisted from 2022, as we can see here, from January, early January. So we're gonna skip that one. So we can actually cross this one off of our list. Next one up is BKU. BKU is active. So with this stock, I'm gonna look at it real quick. So nothing really stands out to me. I mean, the market cap pretty decent at close to 2 billion. Does pay a dividend. Volume pretty weak compared to a typical stock. Earnings seem okay. PE ratio is telling me that it is undervalued, but I don't like the banking services sector for years now. But maybe for short-term play, who knows? Not this stock. I just don't see it pretty active and working in anybody's favor. The margins are just not even worth it. Looking at the 1-year chart, we have, let's see, we have a low of about 1650. The average is about 21 bucks, and then we have a high of about, I don't know, 30 bucks. So following the 200 moving average, we have here a decent price below $27 or less. As you can see, it's not even close to that. Right now it's at $26, so it needs $1 gain just for it to be on the borderline of going into an uptrend, and that will have to hold up. So based on the numbers and the charting, I'm gonna say I don't like the chart and I don't like the numbers so far. Based on the analysts, they have here hold. A few of them said buy. You know, you have that at 9% strong buy and 9% regular buy. 9% to underperform. Funny how now they're starting to use averages, you know, a maximum, average, and then minimum. Something that I've been doing for the longest. So I wouldn't be surprised if other platforms are doing that. But again, definitely a good idea to put on the platform. Quant ratings, looking at these numbers, the highest number that we have is 678. So we have 6.78, close to a 7. The value, I would agree with that. As for these other numbers, I don't really care about any of these other numbers because I just don't like the banking sector. We're gonna look at some earnings. So it looks like they have beat in 2022 Q3. They missed in Q4 of last year. Q1 they missed, in Q2 they met, and in Q3 has not reported. Looking at these numbers, look pretty average. I mean, nothing to brag about, nothing to say, wow, this company It has good numbers, a good statement. Net income, let me look at that. Revenue looks the same. Doesn't look appealing. Net income looks pretty bad actually, down from 2021. Then we have the balance sheet, obviously pretty even. Then we have the cash flow here. So pretty much they're breaking even on cash flow. And again, I just, market cap is okay. But for some reason, I just don't see this stock being attractive whatsoever. So I'm going to say no to this stock. Do not add to the watch list and move on to the next one. Next one we have EMCF. This one is delisted. As we can see here, no volume, no high or low. Even the chart is starting to look bad. So January of this year, which was when the stock actually got delisted. So I don't know what happened to that stock, but again, we're going to say no to that one and move on to the next one. So we only have two left. Ticker symbol BANF. The volume right away, market cap is nice, but the volume looks really, really bad. Very, very inactive. That's a nice jump from May, and it's still holding up all the way till August, end of August. Held up pretty good. So let's look at the 5-year, approaching its 5-year. The stock is okay, but the volume is horrible. Looking at the other numbers for the first page, it looks like it's at a fair value. Dividend is at 1.7. Earnings are at 6.7. They can definitely afford the dividend. Chart looks pretty decent actually, but again, I just don't like the banking sector. It'll be hard to sell this on the open market. I mean, it's pretty decent, the stock, but the charting, there's not enough liquidity, meaning it's hard for you to buy it if you have a set price in mind, or if you want to sell it and you have a selling price in mind. It's just really hard to do that. Looking at the financials here, we have uptrend, 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 and then right here now all of a sudden after Q1 it starts downtrending. That's not really good. We want to see it stable. It's not giving me annual numbers. So we're going to move on to the income statement. Revenue has gone up. Net income has actually gone up for this stock as well. Slightly better than 2020 and 2021, which were difficult years. And comparing to 2019 and 2018, they've done pretty good for 2022. The net income is still growing. I mean, that's still good news. Balance sheet, we have at 89% debt. Cash flow, we're going to see what's going on with that right about now. So we have positive cash flow at about, guesstimating around 900 million. So positive cash flow, and they can definitely afford the dividend. They raised their dividend, it looks like, every year, even since 2020. So that was the end of 2020, and from 2020 to 2021 they raised it 2 cents a quarter. So from 32 cents to 34 cents at the start of 2021. Well, the first half of 2021 ended in the second half with 36 cents. So the beginning of 2022, 36 cents. And then they ended with 40 cents. So next payment, I would expect it to rise another 2 cents at least. That looks like the trend again ever since 2020. So in total, I would expect again next 2 quarters at 42 cents. So they did have splits in 2017 and 2006, 2-for-1 split. And for this stock, it's just too pricey and not enough liquidity, so I'm gonna say no to that stock. Last one up that we have is ticker symbol FITB, which is Fifth Third Bank. I think I went over the stock. I might have gotten over the stock earlier in the year or maybe last year. A very, very active stock, $25.91. Again, that's the actual price as of right now since markets are open. Volume looks good. Market cap is pretty good at 17 billion. The earnings are 3.5, dividends are 1.3. PE ratio is at 7.3, so very undervalued. The chart looks pretty weak. It hasn't done much. So the 200 EMA still hasn't even caught up to the 5-year trend, and it looks like it's just beginning to go down with its other indicators. And then you can see this flush right here in February. That was the collapse of the banking. So most of these banks have not done well, as you can see. So decent numbers for the first page. Charting needs a little bit of work, but I think they can survive. They have minimum estimates, average, and then max. I'm not gonna look at that. Wall Street seems to favor the stock slightly, and 33% are saying you should hold off on the stock. Shouldn't buy or sell. We want to see more confirmation. Let's look at that analysis for the quant ratings real quick. It's not showing me anything for quant ratings. That's weird. Oh, here it is. So highest rating was 7.5 for quality. This seems like an active bank, I guess. I would assume that they're paying regular dividends and rising dividends. I would say people do like being a customer if they consider this a quality company. Or on top of that, obviously management might be doing pretty good at what they do, or just handling finances really, really well. One or the other, or several of the categories mentioned that they're doing well, or they could be doing everything well. So moving into the income statement, we have net income is like pretty random. I mean, in 2020 we have here it's down, then it's up, then it's slightly going down. I don't like randomness. I like consistency. It can help if they had okay years during downtrends, but if we're having a good year, I would expect the stock to do okay, and it doesn't seem like it's doing that. Revenue has gone up, so based on the chart, it's not actually aligning too much with the actual financial reports. Balance sheet is at 91%. Cash flow, which we want to see, is the most important thing here. So we have 1.5, so 400 million in cash flow. So they are cash flow positive. Dividend of 33 cents. And then we have here 2020 27 cents, in 2021 30 cents, and in 2022 33 cents. So again, that trend of 3 cents, I'm expecting it to go up again for another 3 cents each quarter. So for this stock, it's pretty active. I wouldn't jump into it, so I would say yes, watch list it, just to see what's happening in the overall banking system. Again, I'm not looking to buy into the stock or sell the stock. It's just so watch listed just to see movement, I guess, in the overall banking system and then the market cap when it falls to the banks. But this seems like one of the stronger banks. So again, I only had 5 stocks. Only one of these guys made it, and the rest, again, I do not like it for a watch list. So yeah, it's time to go back to work. It's the end of my break. Thank you guys for watching. I hope you guys enjoyed the video, and I'll see you guys in the next one.